Hi there, it's Mr. Adams here, a mathematics teacher with over 20 years of experience. In this video, I want to explain why when you see those graphs explaining how the capital gains tax caused these massive price rises in the early 2000s, they actually don't actually show that. They actually show the opposite. This is a good graph that shows the housing crisis that we currently have. We can see that dwelling prices far exceed average earnings, which are hardly going anywhere. And this gap becomes wider and wider, particularly from the early 2000s onwards. When we draw a line in 1999, that's when the 50% capital gains discount was first applied, you can see that that seems to be roughly the point where you get this wider and wider gap. Is pointing out the obvious that house price growth has outstripped wages. Now, the gap really starts to widen significantly after the 1999 capital gains tax change. So it looks like we got this nice, easy case closed. It was definitely the 50% discount. As a mathematics teacher, I'm legally obliged to point out that correlation is not causation. And we can actually solve things here by asking the right questions. First question we should ask is, why do house prices start rising before the 50% discount actually comes in? If I was to ask my students, where does this graph start deviating away from full-time earnings, I would say this line here, or you could actually make an argument back in 1987, but we'll get to that later. So the interesting thing about this is that the 50% capital gains tax wasn't applied retrospectively. So that means that anyone who was buying in the mid-90s knew that they weren't going to get the 50% discount, but they still bought anyway. So when the 50% discount came in, the real house prices, so this is the amount above inflation, was already at 10% and had been increasing for the years previous to that, and was at the highest rate that it had been for a decade. A really fascinating question is, why do house prices stop rising immediately after the 50% capital gains tax is brought in? When we look carefully when the 50% discount is brought in, we can see that the first move of the market with house prices is actually down very slightly, but it is a definite downward move. Here's another graph that has that dip after the 50% capital gains tax is brought in. This one is showing the difference between what mortgages are and earnings, but again, you still see that little dip. This graph is showing the change in growth rate. So when it's down the bottom, it means house prices aren't growing. When it's at the top, it means that house prices are increasing at 20%. So we can see that in the years before 1999, house prices were growing, and they were growing at a faster and faster rate. But when the 50% discount comes in, it temporarily slows down before taking off again. The most dramatic way to show this is quarter by quarter. So what I've done is I've taken the quarterly change multiplied by 4 so we can get an annual rate. So after the capital gains tax was brought in 1999, that's the 50% discount, it was above 10%, but within 3 quarters, the growth rate had dropped to 0 before taking off again. It leaves some really good questions. If the 50% capital gains tax was so good for investors, why did house price growth initially stall? It may have kicked off again, but it couldn't have been because of that 50% change. Because to make use of capital gains, you need house prices to rise. But house prices weren't actually rising to make use of that gain. So what caused house prices to accelerate in the early 2000s? This line represents where the first home buyer grants are reintroduced, and you can see that's more clear the moment where house prices start to rise exponentially. When we go back to that quarter by quarter change, we can see that when the 50% discount is introduced, house prices actually slow. They get to a point where they're no longer growing. But as soon as that first home buyer grant is reintroduced, within a few quarters, it's up around 20% annual growth. Our next fascinating question is, why were house prices matching wages when there wasn't any capital gains tax? Prior to 1985, there was no capital gains tax on housing. And then like an inflation-based method was introduced. But the interesting thing here is that when there was no capital gains tax, we can see we've almost got this perfect matching between house prices and earnings. It's completely counterintuitive, but house prices increased less when there was no capital gains tax at all. Something that I haven't heard a good explanation for is what caused house prices to rise around 1987. It doesn't look so impressive on this graph, but at this point, you have the fastest growth that is experienced anywhere on this graph. At this particular point, house price growth is approaching 40% per year. Because of the compounding nature of the data, the stuff on the right appears bigger than the stuff on the left. It's a bit like the Greenland versus Australia when you sort of have a look at it on a map. In 1988, house prices were at 40%. This is above inflation. This is double the rate of what happened in the early 2000s when the first home buyer grants came in. So this is 2 years after the inflation-based capital gains tax was introduced. So did this have some sort of delayed effect causing it to rise, or was it something else? Now, I really don't know, but what I do know is that it wasn't the 50% discount. There are so many flaws in the narrative that the 50% capital gains tax caused house prices to rise in the early 2000s. So let's recap those. So let's go through the flaws chronologically. So house prices were steady before there was capital gains tax. Now, when that inflation-based capital gains tax came in, house prices theoretically should have gone down. That's a theory, but within a few years, they had hit 40%. Now, after the recession in the 90s, house prices were already at over 10% before the 50% discount came in. And less than a year after the 50% capital gains tax is introduced, house prices stopped rising. House prices then start rising exactly to the quarter when the first home buyers grant is reintroduced. So, and also from this point, proponents of the 50% capital gains tax causing all these problems need some absurd investor logic. So let's look at that now. Let's transport ourselves back to the year 2000 and imagine you're an investor. To buy housing at this time, you would need to ignore that the previous decade had low price growth and high inflation. You would need to see that house prices had stopped growing, but then turn around and go, well, the 50% discount has to be a bonus, but still ignore the fact that 50% of nothing is still nothing. Irony of all these graphs that meant to show that the 50% discount caused the house price growth, when you really analyze it, it actually shows the opposite. The irony of all these graphs, it almost suggests that counterintuitive that the capital gains tax should actually be reduced to zero. But I'm a little bit cautious. Just because the 50% discount didn't cause house price rises, it doesn't necessarily mean that it's not continuing price rises. There is a subtle difference there, but it is an important distinction. Thanks for watching. Please subscribe and hit the like button. Please leave a review and a comment. I'm not a financial advisor. I'm a mathematics teacher with a passion for teaching financial literacy. Please read the disclaimer.